Hey guys, welcome back to Evolve or Die. I do have a market update for you guys. I just wanted to alert you guys that right now I have closed all of my positions and I'm only holding cash at the moment, with the exception of one SPAC. And I'm going to talk a little bit about the SPAC at the end of the video. But the reason that I closed all of my positions is because I do think there is a massive market correction coming very soon. And we're going to talk a little bit about why I think this correction is coming. We're going to be talking about institutions that are buying up all the real estate. We're going to talk about inflation. We're going to talk about the Fed and their eerie dealings with BlackRock. And yeah, guys, so let's dive right in. But before I dive right in, I'm going to need to paint a picture of the 2008 financial housing crash. And essentially, too many people had taken on loans at extremely low interest rates. And because of these interest rates being low, many of those loans were mortgage loans, naturally. And even with the really low interest rates that banks were offering during this time, people still could not afford to repay the loans. And having this influx of people flooding the market, looking to acquire these loans at really cheap interest rates, lenders started relaxing their strict lending standards, and they started extending credit to people who were less than qualified. Like, they might not have met the financial requirements. They might not have made a certain income. They might not have had a certain credit score that was within the normal threshold that banks would usually lend to. So this drove up the housing prices to levels that most people couldn't afford. So something that's helpful to remember when you're thinking about the housing market, when interest rates are low, the housing prices increase. And when the housing prices are really high, the interest rates are very low. So I just want to put that out there as kind of like, it's not necessarily a rule of thumb, but they're generally very, very closely correlated. So anywho, how does that relate to what we're seeing right now? Well, I don't know about my followers, I don't know about my viewers, but my boyfriend and I were in the housing market very briefly at the beginning of this year, leading up into May. We were looking for a house. And pretty much to sum up the conditions of the housing market right now, we were looking for houses. We would look at these listings that sold for, let's say, $180,000 just back in December of 2020, and checking these same houses that were listed back in 2020 at around 180, 190, less than 200K, are now sitting at upwards of 220. So we've seen an influx of prices in the housing market, and we're going to tour houses. We toured a bunch of houses. The real estate agents showed us around, and every single listing, every single place that we went to visit, every single place that we liked, they're like, oh, the seller wants an offer today. The seller wants your offer by 4 p.m. And, we're kind of like, we just looked at the house. Like, are we supposed to make a decision in 2 seconds about where we're going to spend the next 10, 15 years of our life? Okay. So lo and behold, every single place that we wanted to visit, first of all, these markups that were just a few months prior that were selling for 20, 30% lower than what they were relisted for just a few months later. And no improvements have been made, no renovations. There was nothing done to these houses to actually improve their value whatsoever. There was nothing done to the surrounding properties to increase their value. The reason that the prices are so inflated right now are because interest rates are so low. When rates are low, prices are high on real estate. So fast forwarding a little bit, we're looking for these houses, and every single time that we saw a house that we liked, it would sell in just in a matter of hours. It would be listed and then it would be sold in a matter of hours. And we're just like, oh my gosh, people are buying these houses. And our realtor even told us, like, people are buying these houses without even coming to see them, without performing any of the inspections that people generally perform before closing on a house. There was no appraisal of the properties. People are literally, the way they presented it was people are looking at these apps online and looking at the location, saying, great, we're in, making an offer. That's not really what's going on. What's happening is that institutions are swooping into the market and offering 20 to 50% above market value for these houses. So what does this mean when hedge funds start buying up all of America's real estate? Well, these corporations and institutions that are able to scoop up real estate are able to do this with the help of the government. So the Federal Reserve, just a few months ago, actually hired BlackRock to help execute mortgage-backed security purchases. So mortgage-backed securities, we know that is an asset that is backed by a mortgage, by a mortgage loan. So the Federal Reserve has hired BlackRock, who is an asset management behemoth, and they're helping them essentially execute the purchases of commercial mortgage-backed securities as a part of the central bank's aggressive efforts to shore up the US economy. So the Federal Reserve is giving the explanation that they are assisting in scooping up real estate to propel the economy forward, to help the economy. But it's not painting a very good picture when regular people cannot buy homes. We can't buy a house because the prices are so inflated. And the reason that they're so inflated is because people know that they can sell way over value to an investor, to a institution that is willing to pay, like we talked about, 20 to 50% over market value for these houses. So where does that leave the rest of us that are looking for homes? Well, that leaves us as renters, and that leaves us with BlackRock and the US Federal Reserve as our landlord. So that's just a quick little rundown of what's going on in the housing market and why prices are so expensive. Remember, there's a direct correlation between the rates and the rate at which institutions are purchasing homes and real estate in residential areas. So how does this correlate to the market, and why do I think that there's going to be a huge market correction? Well, this is where it gets really interesting. BlackRock, the massive asset management firm that we have been speaking about that's buying up a lot of the real estate, some of their analysts have actually come out and literally said that they're looking to own 75% of the US housing market. That is pretty alarming. But anyways, where this gets really interesting is BlackRock has warned that US stocks are at risk, essentially from higher taxes and them being at peak growth because of the bubble that we're in right now. So they issued a statement saying, we see equities in a developed market outside of the US as better positioned to capture economic restart over the tactical horizon as the powerful restart broadens out. Potentially higher taxes and more regulations could pose challenges to the strong performance of US stocks. So what are they saying? This huge investment firm is essentially releasing that they have a very negative outlook on stocks performance in the upcoming future. And because of that negative outlook, because of tax rates being increased for corporations, because of the interest rates, because of anticipated inflation, we're going to see just a general negative outlook, a negative sentiment surrounding US stocks. So this asset management firm, BlackRock, is looking for alternative securities. They're looking for alternative assets outside of the US stock market, as they stated. They are looking, their alternative asset is real estate. They're going to scoop up so much of the real estate when this housing bubble bursts. We saw the same thing in 2012. From 2008 to 2012, when the housing market was in a giant bubble and it popped, Invitation Homes and American Homes for Rent are the two largest residential real estate investment asset firms that are in the United States. They're the two largest ones. And we saw them become the largest homeowners in America. We saw that happen during 2012, right after the bubble burst, right after the financial collapse of the housing market. Because after these peaks, the peaks during 2008 to 2012, the housing market, it hit a peak, and then it dived off a cliff. The bubble burst, and these two real estate asset management firms scooped up and bought collectively 133,000 homes. And that was between 2012 and 2017. My stats and my numbers are not up to date for the current ownership. However, they are still the largest residential owners. So anyways, fast forwarding back to now, we are in the same exact conditions. Instead of people taking out loans, however, like they did in 2008, what we're seeing now is the Federal Reserve keeping interest rates low. We're not seeing banks keeping the interest rates low for loans. We're seeing interest rates kept low for treasury yields. We're seeing interest rates kept low for bonds, okay? So guys, we're seeing a direct parallel of the low interest rates and an inflated housing market. So what happens after the housing market will not exponentially increase. It cannot keep climbing at the levels and at the rates that it's climbing. So when it dives off a cliff, when that correction comes, when these houses that have been sold at the very top of the housing market, people that are buying houses right now that are in the 200s, in the mid 200s, that sold for 190 just back in December. When the housing market corrects itself, you're going to lose equity. The equity it's going to go down. Okay. So what we're seeing is going to be the same deal. Back in 2012, when Invitation Homes and American Homes for Rent scooped up all of the cheap real estate, we're going to see it happen again when this market crashes. When this housing bubble crashes, BlackRock, all of the real estate investment firms are going to come scoop up the cheap real estate on sale because they can. And it will be so cheap, and they will still be able to offer over market value for those who are looking to sell. So again, guys, how does this all correlate to the stock market crashing? It comes back to that negative sentiment. It comes back to the outlook for the future. BlackRock is essentially warning, like they're looking elsewhere to put their money into assets outside of the New York Stock Exchange for the foreseeable future. So that's a pretty huge deal. That is the reason why I am not holding anything at the moment. However, I do have a play for the week of you guys. This is the only position that I am holding right now. It is a SPAC, a Special Purpose Acquisition Corp, and they are merging with a company called Planet Labs. So ticker symbol, I'm pulling up my account here. It's been a hectic day. So I'm pulling up my account here. The SPAC ticker symbol is DMYQ, DMY Technology Group IV, Roman numeral 4. So guys, essentially a little rundown of Planet Labs. This is going to be a $2.8 billion merger. With this SPAC, shareholders are going to see 12% of this merger, and they're going to see 12% ownership in the company Planet Labs. So what is Planet Labs? It's essentially a satellite software data analytics company, and I will post a link down below so you guys can check out their investor presentation, do some of your own research and due diligence for that. But that is my only play for the week, guys. I am not holding anything at the moment because, like I said, I think we are going to see a massive correction here, and that's going to pose a great opportunity. I can't wait, actually, so I can have some great picks for you guys. I know a bunch of my high conviction growth picks are going to be on sale. We're going to see a lot of great buying opportunities. We're going to see a lot of fear. We're going to see a lot of fear in the market. And here, we love fear. We love the fear in the market. We love red days. We buy the dips, okay, guys? So keep evolving, guys. And that's pretty much my take on the housing market right now and how that's directly correlated to the stock market and the impact that inflation and the rates of interest and the Federal Reserve and institutional buyers collecting real estate, they're all intermingled together, guys. So take what you will from that. I'm not a financial advisor. This is all for entertainment and educational purposes only. And thank you guys so much for tuning in. Until next time, guys, keep evolving.